Monday, November 25th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about the current monetary banking system we've had, and it's been going on for hundreds of years. Some countries have to try to get away from it, like the United States did in its infancy, and with Andrew Jackson not renewing the charter for the Second Bank of the United States. In the UK, though, and I'm going to focus how the money is created in the UK, but it applies for all the other countries as well, uh, uh, and especially to the US. It's the model that started out with the Bank of England. The founder of the Bank of England even said in public that the bank had the power to create money out of thin air on which they could charge interest and receive gold for it. Of course, the gold now is out of the system, so it's even worse. There isn't even a backing from gold, right? So they can create money ad infinitum with no limit, and that's why we have such a huge debt bubble. So is it the central banks that create the money? Partly. They do partly create some money for their agent banks, like the Federal Reserve has done now through the repo market. The same thing happens at the Bank of England. But the way most of the money in the system is created is when a bank writes a loan to you, right? They will credit your account. If you take a loan of £10,000, for example, with NatWest, they will write that entry, that credit entry into your account. Most people think that they get that money from other depositors, but they don't. They just create it. They just write it down. Can you imagine if you could do that? So that's the great scam. That's fractional reserve. And what does the fractional reserve really mean? Well, basically, let's say if you deposit $1,000 or sorry, £1,000 into your RBS account or your Barclays account here in the UK, right? That will give those banks the power to lend another 9 or 10, sometimes even more, on the back of your £1,000. So that's the fractional reserve. And why is that system bound to fail? Why does it create inflation? Well, because it keeps diluting the value of your £1,000, right? You put £1,000 in there, and they lend out 9,000 or even more. Someone's going to get that and go buy something, and you've only got 1,000, right? So over time, the paper currency that loses its value, right, against everything else. Because in the real world, people can't create things like that. Basically, what the bankers have, the mechanism they have is like magic, right? And they've had it, well, here in the UK since 1694, when the Bank of England was founded. In the US, they've had it on and off, of course. Federal Reserve Federal Reserve Act was passed in 1913, just before Christmas. And then the Federal Reserve System started operating in 1914. And why does the system encourage leverage? Well, because fractional reserve is leverage, right? What about the gold? Why does it make it even more leveraged and more unstable to take gold out of the system? Well, because even when they had the gold standard, where they had to maintain a certain amount of gold as reserves, they could do the fractional reserve, but they couldn't do it as abusively as they do now. Now you don't have to have any gold, so the sky's the limit as long as people and governments, right, keep borrowing and corporations keep borrowing. This system will go on, but public seems to be reining in the borrowing, right? That's why the economies are slowing down. But you've now got central bankers like Marine Lagarde saying, well, the governments have to step up and start borrowing. We have here in the UK the same thing. Labour Party saying they're going to start borrowing even more. I think the Conservatives are going to do the same. What about corporations? Why are they borrowing? Well, most of them are not borrowing to increase their operations, right? But mostly to buy back their stock. And that's why the stock market is going up as well. And how can they borrow and be so sure that they are going to be able to pay it back? Well, they don't care, do they? Because they get stock options. They're getting richer and richer, the big executives. They will probably, over time, how can I say, liquidate some of those holdings. If interest rates go up and the whole thing implodes, they don't care. They don't care about the long-term feasibility of this operation. And of course, the central banks are keeping short-term interest rates low. They're manipulating things lower. So can they keep going forever with this? Are the central bankers all-powerful like God? Do they have the power to keep creating this phony credit or money? I don't think so. Right now, we're in a period where it seems to keep going with no end to it. But in the end of the day, human nature in general, things that are not sustainable really, usually end. When it's going to be is the $64,000 question. The only way to be prepared for this is to make sure that you have savings outside the system through precious metals. It's very simple, gold or silver. And I personally don't play this game. I don't want to be involved, because when this thing turns, it's going to be the most devastating financial crisis in recorded history. It's going to be worse than '08, worse than the 1929, early 30s crash and depression. It's going to be worse than probably the 1343 or so collapse of the Florentine banks, right? It's going to be devastating. So that's how they create money, guys, here in the UK, and it's done everywhere else. One of my viewers asked me to explain how it happens in the UK, because I've spoken about how it happens in the US, but it's no different here. The Bank of England, of course, is like the granddaddy of the central banks. So the Fed learned from the Bank of England. That's what it's all about. So it doesn't really matter who you vote for, left or right. The bankers have basically been in charge for 300 years, at least here in the UK. No wonder Meyer Amschel Rothschild said, "Give me control of a country's money supply, and I care not who makes the laws," right? So they're laughing at us. So what's the way to fight these bankers? Well, to get out of the system. They hate when people buy gold and silver physically. That's why they created a GLD, that ETF, which I wouldn't trust, right? So now let's have a look at the markets, see where we are. It's 7:45 a.m. London. There's more headlines here talking about how there's more optimism about trade, right? So I'm using Zoom here. So let's look at the markets here. I'm going to share this screen with you guys. Let's have a look, see how this works. There you go. So we've got spot gold here, 1458.22. It's down just under $4. The range has been 1463 to 1457. Silver is down 12, 1686, down to, almost 1/4%. Range has been 1704 to 1685. Should we be discouraged by this? Not really. Not really, unless you're trading and you're long the futures, which is not real gold. Then yeah, you're disappointed. Over the long term, we're going to see that if you don't have precious metals, when everything goes under, you won't be protected financially, right? Right now, it seems that the markets are going risk on, right? They're buying stocks, they're getting out of gold, which is a safe haven, and silver, right? So you see here the Dow is up another 82 this morning. I think it was up over just over 100 on Friday. We're up 1/3%. There you can see there the range. S&P 500 up 9. We're comfortably now above 3,100, up 1/3%. The NASDAQ 100 is also up 1/3. And we're seeing the pound a little stronger here, 128.59, up 0.2%. Euro is up slightly, 110.26. Dollars up 0.15 against the yen, 108.80. And the dollar is a little weaker against the yuan at 703.05. Crude oil still fairly firm there. You see WTI crude, U.S. crude is up 0.2%, just under 58. And the Brent is also fairly firm at 62.75. So those were the markets. I hope you enjoyed this better having me share the screen directly. I'm recording through Zoom with a microphone here. So now let's look at the bond markets, see what they're doing. You would expect the bond market to be a little weaker, i.e. yields should be up, right? Because there's risk on. So let's see if that's happening. 10-year yield is up slightly, not that much. It's at 178. So you would have thought with the risk on back from Friday and today, we would be a little higher, but it's not. So this means bond prices have dropped slightly. So that's the bond market there. So let's quickly look at the cryptocurrencies, because cryptocurrencies have dropped back down. They dropped quite sharply late last week. They rebounded and now they're back down. So let's have a look at the what they're doing here. So there you go. Bitcoin is actually back below 7,000. It's 6,700. It's been as low as 6,570. And we've got Ripple. I've got WorldCoin Index. I prefer that to Coin Market Cap. I've just gotten used to that. See, EOS is down as well, 1.5% at 240, and Ethereum down 3.76. So yeah, right now cryptocurrency is having a tough time. So that's the situation in the markets. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you share this video far and wide. Also, make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.